Hi, Warren William here from Smartest Data. So these videos are released on a weekly basis where I'll discuss the current week with economics, stocks, and I'll review the portfolios. So the key focus this week was the Fed rate announcement on Wednesday. In stocks, it's another major week for earnings announcements. A number of the big tech companies, Amazon, Alphabet, Qualcomm and Apple, they'll all announce. Then towards the end of the video, I'll give a quick review of the portfolios, so the top 10, the dogs of the Dow and the CNBC final trades. Then at the end of the video, I'm going to do a quick demonstration on how to build a portfolio inside a bar chart or fin screener. So let's go to the video. So on to economics, and there was the expectation that the Fed would raise interest rates by 25 basis points, and this was confirmed. The chairman's comments reiterated the commitment to bring down inflation to the target rate of 2%. Thus further rate rises can be expected, but maybe the pace will ease. Quick review of the economic data for this week. House price index on Tuesday. Wednesday, the manufacturing PMI. Thursday, initial jobless claims at 187,000, and also manufacturing orders, and 1.2% increase is expected. Then Friday unemployment, the unemployment rate at 3.6% is largely unchanged. Non-farm payrolls 190,000. So let's go to the stocks, but before we do, please like and subscribe the video. It really does help the channel. So on to stocks, and the global stock markets have opened the year in rally mode. In January, in the US, the Dow's up 4%, S&P 500 up 7.7%, and the NASDAQ up over 13.4%. Stock markets are very forward or leading indicators for the expectations for an economy, and in the US the vote is clear, at least from equity investors, that the likelihood of a recession is a long way away. Look, the earnings season has been solid. There has been a few exceptions. Goldman Sachs and Intel, for example, their earnings were disappointing, largely on the case of Goldman Sachs due to company-specific factors, and then Intel with industry and some company-specific factors as well. Microsoft warned about a slowdown in sales, and as discussed, the tech-heavy NASDAQ has been strong so far this year, so a warning such as Microsoft can take the tech sector lower. So this week's a big week for earnings, as you can see from the ticker below, and naturally all eyes will be keenly focused on Apple, Alphabet, Amazon and Qualcomm, which all release earnings after the close on Thursday. Apple, the key figure to watch will be the quarterly EPS figure, which is expected to be $1.94, down around about 8% from the $2.10 announced Q4 2021. Apple's revenue is expected to be around about $121 billion. Then on to Amazon, adjusted EPS is expected to be around about 17 cents per share. Amazon's received a lot of downgrades. If you consider over the last 3 months EPS estimates, they've received 1 upgrade revision and 17 downgrade revisions. Then on the revenue estimates, they've seen 9 upward and 17 down. Revenue estimate for Amazon is expected to be $145.7 billion, an increase of 6.1% year on year. And we're going to get to this in a moment. So Alphabet in Q3 missed estimates by around about 16%, which is a fairly big miss. Look, the analysts expect adjusted Q4 EPS to be around $1.20. Okay, so let's go over to look at the dichotomy between the bottom line, net revenues, and also the sales for the big tech stocks. As tech companies announce their results, we must take into consideration the difference which is going to come between the net income line and the sales. So on the major companies, Amazon, net income down 87%, Netflix down 66%, Meta down 40%, Alphabet down 23%, Microsoft down 7%, as well as Apple down 7%. But if we look at the sales are slightly down or frankly even up. So Amazon plus 1.5%, Netflix up 1.8%, Meta down 6.6%, Alphabet up 1.7%, Microsoft up 2.4%, and Apple down 1.5%. So just in closing, Qualcomm consensus estimates revenues of between $9.56 to $9.6 billion, with adjusted earnings per share of between $2.29 to $2.36. Let's go on and take a look at the portfolios. Okay, so here we are in the top 10 stock picks portfolio, and as you can see, the portfolio's done quite well, up over 15% for the year. If we look at the analyst recommendations, a large amount of stocks in a strong sell or sell, but if we look at on an earnings rating, most of the stocks appear in the strong buy to a buy, and then we have ExxonMobil in a neutral. If you look at the portfolio diversification, we can see financial services, 3 stocks, 27%, technology, 3 stocks, 27%. And then also we have communication services, 2 stocks at 18%. If we look down here for the individual weights, we can see there that Amazon and Qualcomm have done quite well, as well as Nvidia. So they've overperformed, and that's why their weightings are up in the portfolio. If we move on to correlation matrix, you can see the stocks are quite highly correlated, which is probably a reflection of the performance. Thus, if the markets were to turn over, this portfolio would probably underperform the market. Okay, so just looking at according to the analyst price recommendations, there's an average upside potential of 27%, with around about 85% of the stocks on a strong buy. So what have been the key performance so far? Nvidia, Qualcomm, Amazon, Google, Apple, and Wells Fargo. So it's quite related to the tech sector. Okay, so here we are in a new portfolio, which is CNBC Final Trades. So that's on the halftime report where the panelists give their best stock picks. Okay, so far the portfolio on the week has done 1.12%. We can see the moderate sells, the sells, and on an earnings rating, what's on a strong buy, or neutral. Okay, so if we look there, also on the technical summary, then if we look there, the diversification. So this is a stock pickers portfolio. So what I do, I've got mega cap stocks, mid cap stocks, and small cap stocks. So basically what I do is distribute the weighting, not on a market cap basis. Otherwise, a couple of stocks would absolutely dominate the portfolio. So you can see on the individual stocks, what I've done here, some stocks weigh 15%, 10%, and 5%. So if we look here, the consumer cyclicals, then healthcare, financial services, energy, communication services, industrials, and then also technology, Qualcomm in semiconductors. If we look to where the analyst recommendations is roughly about a 14% upside, about 6 stocks on a strong buy, and most of the portfolio would be on a hold at this point in time. If we look quickly just down on the performance over the week, so Bank of America has done well, Qualcomm, and also Abbott Laboratories. Okay, so as promised, how do we input a portfolio inside a FinScreener? So we set up the portfolio. Here's the first trade we're putting in, General Motors. So put in General Motors, this ticker symbol, the number of shares, the price, the buy, fees, date, dividend accumulate. Then we go on and we continue to do that for all the shares. So we've got AbbVie going in, Qualcomm going in, Carlyle going in, Chevron, Bank of America, Advanced, AVD Auto Parts, Mastech, Citigroup, Live Nation, Viper Energy, and Abbott. So there we go. You can see the whole portfolio has been set up, and that's what it looks like. There's the distribution, there's the diversification, the earnings ratings, and we can go through various aspects. Not a highly correlated portfolio, and the upside there is expected to be around about 12% based on the analyst recommendations. Okay, it's only been going for a couple of days, so there's the performance. So here we are inside a bar chart, and to set up the same portfolio, the CNBC Final Trades. Create the portfolio, put in the notional amount, and then start inputting the trades. So you see General Motors, the entry price, the quantity, the trade date, the fees, and on we go. So we'll put the same stocks in, so that's down AbbVie, Qualcomm, Carlyle, Chevron, Bank of America, ADV Auto Parts, Mastech, Citigroup, Live Nation, Viper, and also Abbott and GE Healthcare. So look, I'm part of the bar chart affiliate program, so if you'd like to subscribe, by all means take a look at the link below. I get a little bit of a commission that helps the channel tremendously, and also whilst we're here, like, subscribe, and ring the bell if you like the videos. So see you in the next videos. Here are a couple of views which you can look at, the various weights which we have, the main view, the first view which I use, set up the performance, not much to see at this point in time, and the performance graph, so you can see how the performance has gone so far. Okay, so that's it for this week. Looking forward to seeing you next week, dedicated to your financial education and teaching you how to look at and how to develop strategies in the stock market.